Hey everybody, welcome. Rob Booker here. We're going to take a look at the FX market today, courtesy of IGUS. IGUS is a leading forex broker. Let's take a look at the charts here. There's some lessons here, even right on the euro Canadian dollar, which was a gigantic rocket ship as oil cratered, as world demand for oil faltered, and folks started repaying euro-denominated loans. So hedge funds borrowed in euros, and when the market started to drop, they bought euros in the open market to pay back those loans so they didn't get caught flat-footed. And at the same time, oil was dropping precipitously, and so the Canadian dollar fell, the euro rose, and the euro Canadian just crushed it in March. But now it broke a trend line. It really broke a shoulder pattern. I like to make those shoulders with dollar signs. And the head and shoulders pattern broke, and we could still see not a significant, but at least a little bit more of a decrease in the euro Canadian. But I have a story about this. So I shorted the euro Canadian back over here in the early middle of March, and my trade size was small. And because my trade size was small, I was able to hold on to that position all the way through now, and it's finally turning around and becoming a profitable trade for me. And it's just another reminder that the fastest way to improve your trading the most dramatically is by reducing your trade size. It sounds like counterintuitive or whatever, but you can have more improvement more quickly through reducing your trade size because you'll not stress out. Like, we do better at stuff we're not stressed out about. And right now there's enough stress going around for all of us. You probably have your kids at home, or your grandkids and your kids at home, or your grandparents at home, or your parents. I mean, all these families are just packed in tightly together, and I know it's stressful as it is. And, you know, the easiest way to reduce your stress as a trader is to reduce your trade size. And it has time and time again proven to be the most significant and easiest way that I have found for a trader to improve their performance. What I want to focus on right now is the US dollar, Japanese yen, because this is really interesting. The US dollar is in high demand as the world kind of falls apart and there's a big demand for US treasuries. But then also at the same time, there's a lot of demand for the Japanese yen, this safe haven currency, the flight to safety, the risk off currency. Lots of low interest Japanese yen denominated loans were made in the past few years. And so there's this battle going on right now. And I think it's one of the most epically cool charts that's going on right now is you have this flying V pattern and what happens now. So almost every time I've ever seen this pattern, and once again, past performance is no guarantee of future results, and patterns fail all the time. But almost every single time I've seen this pattern, this V-shaped recovery, this drop and then recovery, I have seen significant movement upwards and even a breaking of the high. So if we break above 112.50 up here, I think that leads the way. And I know this is crazy. This leads the way to a move all the way to 120 even. Now that could take 12 months, of course, but that would be super giantly awesome to get a big, big trend in there. The reverse is also true though. If we break below 107 and stay below 107 for 48, 72 hours, I like the idea that this is going to fall. This is a harder scenario for me to imagine, but it could happen. Now, could this go up even with jobless claims rising again and non-farm payrolls just going out of control, like negative in May? Yes. You could see the dollar rise even on all of those types of scenarios. You can see that happen. One thing that I don't think that you can easily see rise is the pound yen in the midst of that. The pound yen got hammered, and it's in a downward trend on a retrace. And I think what you're looking at now is a scenario where if it breaks a trend line, pound yen could very easily fall to 123, very easily. It's hard for me to imagine a scenario in which it recovers. It's possible, but it definitely has to start making higher highs and higher lows, and we don't see that yet. And I think some of the worst economic numbers yet to come around the world are going to come from, unfortunately, from the UK. And so that's going to, I think that's going to weigh heavily on the British pound. Of course, the opposite could happen, and we can cross that bridge when it comes. For the time being, what I want you to look at are any numbers, any GDP numbers at all, look at those. And then any employment numbers. And then down the line, you got to put your eye on the inflation numbers, but not for like 6 or 12 months. But I'm going to give you plenty of advance notice. With trillions of dollars of stimulus flowing into the financial system, it's impossible to imagine a scenario in which inflation stays low. It's impossible. I just can't see it. And that brings us to the final instrument I want to look at, and that's gold. Gold's doing exactly what we just talked about the dollar-yen doing. It does this V-shaped drop, this really quick drop, this really sharp recovery, then settles back down and then breaks new highs. And it's gone as high in the futures anyway, 1740. I think it's I think 2000 over the next 60 days is more likely than not. In order to see a bearish trend in gold, I got to see gold break pretty far down. I got to see gold break below 1450. And then I would consider the existence of a bearish trend, but not until that point. And remember, you got to have an argument and a counter argument for everything that you do. But I'm super bullish precious metals, definitely super bullish on gold. I don't think in the zombie apocalypse we're going to be spending gold coins. I think we'll be spending bullets and toilet paper. But I still think that inflation leads to a rise in the price of gold. And you know what leads to inflation is an increase in the money supply. And if there's anything that we're doing right now, it's dramatically increasing the money supply. And what we're going to do is what they're going to try to do is put enough money into the system to get us back to where we were. And then they're going to flood it with even more. And I think you can see that coming down the pike with stimulus programs all around the world. So keep your eye on gold to possibly go higher. Keep your eye on the dollar yen to possibly go higher. Keep your eye on the pound yen to possibly go lower. And keep your eye on the euro Canadian to possibly fall lower, especially if Saudi Arabia convinces the rest of the world. And it's going to happen at a moment's notice, and it won't come with any advance warning to cut production, and then the price of oil recovers significantly within a very short period of time. Thanks again to the folks at IG for helping us out here, for sponsoring this video. When it gets back to a time that we can travel, we're going to run around and give away a bunch of that sponsorship money. So thank you to IG. We probably come to Chicago to see you folks and tour the offices maybe. And thanks so much for your support. Everybody check them out at the link below the video. Thanks so much for being here. Subscribe to the channel if you want to get more content like this, and I'll see you later. Bye for now.